without incurring different costs. So those costs you incur as a firm, or as a company, or as a business, is what we call capital expenditure, or is what we call expenditure. So for expenditure, we have, for expenditure, which is expenses. So we have capital and revenue expenditure. So that means for expenses of a business, or the expenses a business incur, it's either on capital or on revenue. So what is capital expenditure? I wrote, these are investments on non-current assets of a business. So when we talk about non-current assets, we're talking about assets that can stay for more than a year. These are what we call non-current assets. Example of non-current assets are the machinery, equipment, what else do we have? The machinery, equipment, fixtures and fittings, furniture, motor vehicle, all these things I mentioned, all these items I mentioned can stay for more than a year in the business. Do we understand non-current assets here? Do you understand what non-current assets are now? Yeah. So whenever a business purchases any of the items I mentioned, it has to be recorded as what? A capital expenditure. Do we understand what capital expenditure is? Capital expenditure, these are expenses that the business have to pay for and it takes for more than a year. So like your laptop is a capital expenditure because the laptop can stay for you, it can stay with you for over 3 years. So that's non-current asset. So whenever you purchase an asset or an item that can last more than a year, it is considered as capital expenditure. Is it clear now? So, how, in the course of you buying, let's assume we're buying a laptop. And in the course of buying this laptop, we need some legal agreement or legal documents to buy the laptop. Those legal documents needed to purchase this laptop will also be recorded as capital expenditure because they all have cost at the initial stage. So if I am buying this laptop and I have to make different insurance policies or I have to make certain agreements because of the laptop and I have to incur more costs because of the purchase of this laptop, whatever cost I incur from the initial stage, it's called capital expenditure, which means what? We are following the historic concept. Do you understand? Yes. Because the historic concept says whatever asset we buy was recorded with what the initial value. So whatever assets you buy, non-current asset, that has to go, whatever expenses that has to go with the purchase of that non-current asset must be recorded as a capital expenditure. Do we understand what capital expenditure is now? Is it clear? Then, in the course of using this non-current asset, you start thinking of maintaining it. You start thinking of getting maybe software programs on it. These things that you start doing on it, the maintenance, the amount you spend, the expenses of maintenance for this laptop, after the initial purchase of that laptop, is referred to as revenue expenditure. Do we get revenue expenditure here? Do we get it or not? No, okay. We bought the laptop. We recorded the laptop as what? Capital expenditure. Whatever we do at that point in time, maybe we have to maintain, we have to upgrade it to whatever we need to do at the initial stage of purchasing this laptop are recorded as capital expenditure. Now, revenue expenditure. Revenue expenditures are day in, day out expenses of the business. So if after a year we have to maintain the laptop, if after a year we have to repair the laptop, there are no more capital expenditure. It becomes what? Revenue expenditure.
What does revenue capital?
The difference is that here you are talking about the purchase of a non-current asset. Here you are talking about the maintenance of a non-current asset. You bought the car, right? So, like my car, when I bought the car, it is the capital expenditure. But now I have to service the car, right? I have to do, whatever I have to do in the car right now becomes what? Revenue expenditure. You have to service it, you have to maintain it, you have to check the tire, whatever you have to do, they are revenue expenditure. But the first day I bought the car, my insurance policy, whatever I have to get, the number, whatever it is that comes with that car, that initial stage is what? Capital expenditure. Because we are following what the historic concept that states that whatever asset we buy or whatever item we buy was recorded with what? The amount, the initial amount we bought it. Do we understand capital expenditure and revenue expenditure? Is it clear, please? Okay. So example of capital expenditure are delivery costs. Now you bought a car. When you buy a car, it has to be delivered to you, yes or no? So the amount of money you spend to get it delivered at your premises is part of capital expenditure. So now that we have the car, we start using the car. After 2 years, we have to, after maybe a year or two, we have to do some maintenance in the car. Is it capital expenditure or revenue expenditure? I think it's clear now. So we understand the difference between capital expenditure and revenue expenditure. So now that we understand the logic behind it, let's check the difference between capital expenditure and revenue expenditure. The first one, the benefit of such asset lasts longer than a year. So having a laptop, it means you've paid for that laptop. You have, because of you using that laptop, the satisfaction you derive from the consumption, from the usage of this laptop is more than a year. This is your laptop, right? You have been using it now. You're going to continue to use it even until grade 12, after, even in university, yes or no? So the benefit of this laptop stays for more than a year. Do we understand the first point here? Yes. So the satisfaction you're going to derive from purchasing these non-current assets will last you for over a year. Is it clear? Yes. The second, you have a question? Yes. Okay. No. Okay. The second one, sit properly, please. Okay, let's go to immediately to revenue expenditure. It is used up within a year. So just like when you have to maintain your, when you have to service your car, after servicing it, you have to service it again, yes or no? Yes. So it doesn't last longer. So those expenses that you have to incur, those expenses that does not last for more than a year are what? Revenue expenditure. So the satisfaction you're going to derive from maintaining your car will not last for a year. Do we get it? Do you understand? Where?
What did you say?
Please try to focus here. For revenue expenditure, you derive satisfaction. That means benefits of it. Because whatever you buy, you have to, it has to satisfy you. You have to be happy using it, right? So the satisfaction you derive using, spending on revenue, spending on such item will not last for more than a year. So it means that your laptop will get spoiled, and when it gets spoiled, you have to repair it, yes or no? It doesn't mean it's not going to get spoiled again. So every now and then it gets spoiled, or you have to maintain it. It is what? It does not last for a year. But the laptop will be with you. It will last for more than years. But because of maintaining it, it will not last for more than a year. Because you continue to use it. So whatever we use, it has to wear, it has to tear, it has to depreciate. Yes or no? So in the course of depreciation, it means that it needs maintenance. So that means it will not last for more than a year. Do you understand the first point here? Now the second point, then it entails the initial cost and upgrades. So buying a laptop, you have to put Windows 12 or Windows 13, just example. So that means the cost, the initial cost of buying a laptop and the upgrades you do on this laptop are what? Capital expenditure. But let's go to revenue expenditure, basically for the maintenance. So if you have to maintain your laptop, if you have to clean it, whatever you have to do afterwards is what? Revenue expenditure. Are we getting the difference between capital expenditure and revenue expenditure? Yes. You have a question? Okay. The third one, the spending is to increase the value of assets. The spending is to maintain the asset. These are two things. When you buy an asset, it increases the value of it. That means I am buying this laptop because I want an upgrade of it. I want it to get better than what it used to be. We add more to our assets. Yes or no? When you buy a laptop, it becomes an asset for the business. It adds to the value of the assets you have. Yes or no? Yes. But when you have to spend on maintaining the laptop, does it increase the value? No. It does not change the number of laptops you have. Rather, it helps you to maintain the laptops you have. So this air condition, whatever air condition we have in this school, they have to maintain them. They are not buying new one. So now that if the school has to buy more air condition, it means that they want to increase the value of their assets. But if the school is not buying, rather they want to maintain it, then they are doing what? They are maintaining the assets. They are spending on maintenance. So revenue expenditure is what? Spending on maintenance. Capital expenditure is what? Spending to increase the value of the assets. You are increasing the values you have. Is it clear?
Yes.
The fourth one. These items appear in the statement of financial position, and for the revenue expenditure, they appear in the income statement. The difference between these revenue and non-current assets or capital expenditure is that your capital expenditure, you record it in your statement of financial position, your balance sheet, where you have your assets and liabilities and capital. But here, you record it in your income statement, your statement of profit or loss account. That is where you record your expenses. The assets you have as a business, you record it in your balance sheet or the statement of financial position. The revenue, the amount of money you spend to maintain your assets, it is recorded as expenses in your income statement. Are they clear?
Yes.
Are they clear, please?